Let me start today's episode with a special announcement for the investor in IT sector. If you have significant investments in this particular sector, the stocks listed on the screen, then make sure that you submit your advance taxes by Sunday. While it is applicable for everyone, the people who are investing in this particular sector, they are the ones who are minting money and their liability will be lot higher than the other people. The number is 75%. Believe me, I've been around most IT recessions. In this particular recession, I was laid off from my job, the first one, campus placement. In this particular recession, I lost my largest client. And I've been working in this industry for 25 years now. I know how recession looks like for service industry. Your and my opinions could be different, of course. But in today's Nugget section, I will talk about the valuation, give you a global perspective, and specifically why I am missing out on the party. I'm actually not missing out the party. The money is there. I'm investing it in the other sectors. Look at the deep reds yesterday and look at the deep reds today. And the greens, the deep greens, they vanished. Reliance, as usual, however, is in the bottom, pulling Nifty down. And the fortunes of companies are literally seesawing. L&T was at the top couple of days back. Today it is in the bottom. At the top today we had Bharti Airtel, TCS, Adani Enterprises, Infosys and Tech Mahindra. All of these four highs were IT. Next 50 was not very different. Larger number of reds and larger number of deeper reds. On some days, this entire bunch is at the top, which is about 20-30% days, but remaining 60-70% days, it is at rock bottom. What do investors do if they are on the wrong side of a trade over 2 days? Market breadth, like I said, was poor. Only 10 sectors were up. There is some technical glitch and I lost yesterday's data. I'll try and restore it tomorrow. But today's day was clearly in favor of bears. Three of the large sectors, they were on the red. Oil and gas is the usual suspect. That's because Reliance is down. Power pack was at the top, of course, because the Adani pack was on fire. Now, investment banking, we have just one red remaining, that is 28th of last month. But the number of reds in this list has suddenly increased. 2 days back, this had gone to zero. Consumption is at the rock bottom. In the Nifty today, we have two reds, Reliance and HUL. This distance to 52-week low now is less than 10%. Look at Nifty, down whole day. We can attribute perhaps to the expiry factor also today, the weekly one. However, volumes were not very high in the large stocks. And while the graph may not look very pretty, the trading range was not very high. Bank Nifty was even lower. Private sector banks continue to sulk. IndusInd is showing some resistance, however. It was trying to break the range yesterday also. Public sector banks not very different today. The entire pack was down 0.7%, but the volumes were very low. Investing pack today also came for some profit booking, especially the top stocks. Specifically in case of Nuvama, there was a block deal very early in the day. I think the number was 8% of the overall Nuvama wealth outstanding shares. 47x of usual. The familiar pack where I am not touching, just like IT, and hits high every day. BSE, CDSL, CAMS. Auto all red, deep reds that too. Same with auto ancillary, and shipping companies did not like what I said yesterday. All of them were up. Zen Technologies made another high. Metal pack, there was specifically Nalco singled out because of some bad news on the alumina front. There is some sort of strike or political unrest going on in Mozambique, which is affecting the supply chain. I tried to understand what is the correlation with Nalco, which owns its own mines. I could not figure out. I'll try and dig deeper. Oil and gas mostly red, only Adani Total that was up a bit. Power pack, the Adani companies were shining. Reliance Power that has got a big order. Premier hit a new high and then came down a bit. This is a usual thing which is happening for Premier. And Vari continues to go up. Adani Green was rocking 6% up. In sugar, Eat Perry hit another high, up 3.5%. This is one stock that I'm still holding in this pack. Consumption, no respite, all reds. Varun Beverages in the green and the alcohol stocks. So mostly the beverages are looking fine. Rest, everything is looking very bad and the volumes are very high. Non-edible is no better. The complete bunch was down more than 1%. Asian Paints hit one more low. Railway stocks, most of them receded and gave up the gains from yesterday. Three stocks are back to reds. Two Tata stocks were rocking today, Nelco and Tata Tele. And besides cement, the entire Adani pack was in good mood. That too on high volumes. And the distance to 52-week high is still very high. The reason I call out this particular distance is the risk reward ratio is good in the Adani pack, especially if you can hold for a slightly longer period. That does not, however, reduce the risk of losing your money, of course. Global view back to greens. Nasdaq yesterday hit a new high. Brent is slightly up 73.6 now, and currency went to 85.2 today also. Bitcoin is back above 100,000. It's not that I don't like red days, in fact, I enjoy those because I get to buy a lot. But today was a dull day. FIIs sold today, DIs bought. Just 5 days of optimism. IT continues to rock, only one red day in the last 2 weeks. Gold is below 78,000 right now and silver is around 94,000. But the silver ETFs were up a lot today. I called out this yesterday or 2 days back also. There is slight lag between the silver international prices and the ETF prices. US markets were partying, Alphabet up 5%, Tesla up 6%. Couple of mathematical inputs, retail inflation eased, estimate was 5.53. I have no idea how they come up with this number, but I would like to know. Last month it was 6.21, this month it was 5.48, and industrial growth in October picks up to 3.5%, a 3 month high. Previous month was 3.1%. And tomorrow, of course, we should cheer this number. The country is doing well. My trades for the day, I sold Trent and I sold Nelco. Nelco, I didn't wait till it was up 6-7%, so probably about 3-4% for the day. But overall, both trades were around 6% in about a week, maximum 10 days. And today I bought Bank of Baroda, Apollo Tyre, Adani Green, Tata Consumer. Apollo Tyre and Tata Consumer, I probably will exit very soon. I already hold them, but those are stocks in losses. You can consider this probably as averaging down. My gut feeling says that both of these stocks will go up soon. Bank of Baroda I might keep for some time, and Adani Green is just for the run up in Adani stocks. I think it will go up tomorrow also based upon the news flow and the trend. Overall, a green day and an investment day. Nugget time. Let me first start with Nasdaq. Price to earnings ratio 2023. This number was around 20, and right now it is at 40. Doubled in last 2 years. The companies have to deliver a very fast growth continuously to justify this PE. That is because this PE is a forward PE. This should become something like 25-30 next year when the earnings for the entire year are available. Nifty IT, the average has been somewhere around 22. See here, 21.8. We are at 35 right now. If I draw this line, Nifty has tried to breach it earlier also. 1, 2, 3, 4, 5. Here it managed to nearly go to 40. But look what happened after that. Came back to literally 25. That is because Nifty IT is not able to sustain these PEs via continuous growth. There will definitely be one or two bad quarters for the IT industry, the service industry, because we don't have product companies to give sustained revenue. The ones we have are at a P of 250, 300. Now I have shown this graph earlier also, so I won't take too much time. This is the correlation between Nifty and Nasdaq, Nasdaq being the blue line. More or less in the longer run, they are exactly correlated. So if there's a correction in Nasdaq in the next quarter, then Nifty IT will definitely come down. Now think of this blue line as the proxy for US interest rates and the red line as Nasdaq. Nasdaq has been going up continuously. It picked up steam here. That is because interest rates approached zero. So yes, Nasdaq has enjoyed lower interest rates. Interest rates went up here. Nasdaq continued to go up. There was slight correction here. Most Nasdaq companies came down, but then they went up ferociously. In fact, Nifty IT did not correct here. This is the pandemic fall to a very large extent, especially this particular steep fall. Interest rates became zero, and Nasdaq, because of the cloud boom, went through the roof. Now, what are we celebrating when IT pack is going up? The primary thing is US interest rates are expected to be cut very soon, and the general feeling is that once that is done, US companies will have more money to spend. They can borrow cheaply. And if the interest rates are getting lower, then it will leave some money in the pockets of people. Their outflow or the money they have to pay to the bank for mortgages, that reduces, leaves some money for consumption. Economy may go up. US company wise, the feeling is that they will spend on IT, and specifically they will spend on AI, which is more expensive. So that is why we have an IT boom happening in India in advance, factoring in literally the entire next years of expanded spending from the US IT companies, or rather US banks specifically. US banks spend typically around 8% of their revenue on IT. Now, in terms of revenue, JP Morgan is the largest, 160 billion approximately in 2023. Otherwise, most banks are roughly 70 billion to 100 billion kind of number, and there are other banks also. Let's just put a number that all the banks are of the ticket size of $100 billion revenue. At 8%, this number is $8 billion of spending. Let's say there are 20 large banks. So 160 billion of IT spend across these banks. There are a lot more companies also. Overall, this number could be say 500 billion. Whatever number you think is right, just put it. Where is this money typically spent? Cloud, it's a big expense at these days. Other infrastructure, your own servers, laptops, etc., which is also computers, networks, software licenses, internal onshore IT, which is your own IT, which is on your rolls. US IT outsourcing. This is like say Accentures of the world, Capgeminis of the world. People deployed by the large IT services companies, IBM. Then large banks have offshore development centers or ODCs in Pune, in Bangalore, Hyderabad. Most banks have something in India for sure. Then they have offshore partners, typically working with the ODC. Most banks have a split. Say 50-60% people come from partners, 20-30% is their own, maybe 50%. Some people are increasing their own ODC size these days. This is the part which belongs to the Indian IT companies, the services ones like Infosys, TCS, Wipro, HCL, Persistent. Of course, they will do business directly with US, Europe, Australia, etc. also, not just with ODC. What do you think is the overall size of this pie? Just any number, and I'll talk about it. Now, current state wise, this is Nifty IT for the year. A little consolidation and continuous up, 50 DMA, 200 DMA. Looks like a little flat, but this will go up very soon, this also. And this angle will increase if the growth sustains like this. However, we are already in the overbought zone. What happens when we are in overbought zone? You can stay there for some time, but eventually we come down, come down, we come down, we come down a lot. Now, this does not mean we have to come down a lot. RSI can get corrected with small chunks of fall also. Let's leave out the product companies. What is the P of other companies? Coforge 73, KPIT 57, Emphasis 38, 43 for LTTS, 80 for Persistent, 50 for Tech Mahindra. At the top, TCS 34, Infosys 30, HCL 31, Wipro 27. So go and buy Wipro, it is cheap. That's the general logic going on right now. According to recent data, Indian IT outsourcing industry is expected to grow at CAGR of around 13.52%, reaching a market volume of 20.8 billion by 2029. 2029. We are ending 2024 right now. So we'll be probably at 14, 15, 16 billion right now, growing at 15%. Let's say good year, 18%, 20%. Is this P for 15 to 20% growth? How will we justify these numbers 1 month, 2 month, 3 month down the line? One bad quarter, one policy changed by Donald Trump, the new president who joins on 20th. And he is in general anti outsourcing. This is all outsourcing mostly. In a trading bubble, there is always a set of people who have to get trapped here. Typically, these are small investors, their ticket size is 10,000, 20,000, 50,000 rupees. They lose anywhere between 20, 30 to 50, 60% of their capital. And IT's results come first. 10th of January approximately is when TCS will start the result season. Hope this information was useful. Tread with caution. Make money if you are making it in IT, but always be aware that there's a fall somewhere around the corner. Thanks for watching. I will see you tomorrow.